personalization is really hard. If you have $100 or $1,000 in your bank, you don't get very much of a service or anything tailored. They're kind of concierge service that only rich people get or big companies get. AI allows us to give that to the whole of society.
Do you see differences how AI might be adopted?
A lot of these models that we're using, particularly in the non-China world, are American models. If we all start using and relying on AI-driven models that are trained on largely the English language, we constrain our ability to think.
Digital assets, it's a hot topic on the Fintech scene today.
Stablecoins and tokenization, digital assets. This is very much tied into the change in the US administration and the more pro-digital asset and crypto policy they've taken, and then the other side, AI, the agentic AI. Those are the big themes. This year is about rebalancing.
Welcome to the Pulse Check podcast. I have with me Ronit Ghose, who I've also a book from, just read through in the past few weeks. Thank you so much for joining me here today.
Thanks for having me, Salomon.
Yeah, you know that typically I start with an icebreaker before we go into your book and your tremendous background. So share a little bit with me. What's unique about you? What makes you you?
What's unusual about me is that I'm probably, like many of your audience, maybe you yourself, quite international. Yeah. My job has taken me around the world. My year takes me around the world. I have a home in Dubai. I've lived most of my life in London. I was born in India, but I travel extensively for work and for leisure, and I feel at home in most places I go. That's true of a lot of people, but it's probably distinctive rather than unique. Another interesting fun fact about me, and we were discussing this just before we went live, is your name. What does Solomon mean?
Well, there's actually a biblical story as there was King Solomon. Yeah. And my parents were watching in a theater a sketch on the King Solomon, and they just liked the name. So it's not that
it's not because you're wise or
maybe
you are.
Maybe getting there slowly, but
No, because my first the first bank I worked for was called Salomon Brothers back in the 90s. And that's how I got into finance in London. I was part of the expansion of American banks growing in London as a beachhead to expand into Europe in the 1990s and the 2000s. Because that time was quite an optimistic, upbeat time in Europe. And there was this bank looking for junior analysts to cover stock market listings. There were a lot of building societies, as we call them in the UK, mortgage banks that were being listed in the stock market. And they wanted a young kid to help the senior analyst cover these new companies that were being listed in the stock market. That's how I got into banking or capital markets, let's say. And I've been an analyst in some way or another for, about 30 years now.
Yeah, and it's interesting because it also touches a bit on one of the topics for sure we will discuss today, which is AI. Yeah. As we are at the Fintech Week, that's the reason you came over to Hong Kong. Yeah. It's all about AI and digital assets. Those are two big themes. And when you talk about analysts, and I see it also in consulting with junior consultants, the first thing is really cracking numbers, preparing research and all these things. And what do you think will happen now for analysts with the use of AI?
I think AI changes jobs, the way we work, the way we live, in many ways. If I think about how we use AI, maybe you and me, Solomon, I'm speaking on your behalf now, but we sort of use it as a super Google, a super search engine. Just on the way here, I was interacting with one or two of my AI chatbots because I had a fascinating lunch yesterday in Hong Kong with a former colleague of mine who's been in finance even longer than me, and we were discussing the role of the Manila galleons and trade in the South China Sea, the Pacific, And from that, I went down this rabbit hole. And I don't know if you know about the Manila galleons. I'm sure many of your audience do. The Spanish, obviously, controlled Mexico for several hundred years, and the Philippines. And so trade between Manila and Acapulco was like one of the major trade routes of the time. It was like, I don't know, probably like the equivalent of all those New York, London flights. It was a major commercial trade route. And I was just learning about it and reading about it this morning on the drive here to your studio. So one way we use AI is a super Google. Another way we use AI at work is to summarize information, because most of us are syncing in data. So summarizing information. So investigating, summarizing, creating. Obviously inside the technology part of companies, so in the coding and the software business, that's where AI has been used the most, both in technology companies, but also in the technology divisions of finance companies. That's where AI has been used more. And there's a lot of talk about where AI is going to be used. The big kind of hope for AI in financial services, and maybe in other areas like healthcare, is personalization. One of the sort of difficulties of the modern world we live in is personalization is really hard. We tend to give people, unless they have lots and lots of money, cookie cutter solutions. If you have 10 million, 100 million or more as a family or as an individual, you get tailored, specific service. If you have $100 in your bank or $1,000 in your bank, you don't get very much of a service or anything tailored. Now, digital and the Fintech revolution we've lived in the last 10, 15 years already helped in terms of democratizing finance, in terms of giving those individuals, particularly the more digitally savvy individuals, better service, better quality, because they could do self-service. But that kind of concierge service, the kind of tailored service that only rich people get or big companies get, AI allows us to give that to the whole of society. It's a bit like we've seen this with distribution via the internet. It's given access. Think about the access we get now online if you want to look on YouTube or other sources to some of the world's smartest brains. Before the internet or YouTube, you'd have to be lucky enough to study at Oxford or Harvard or Stanford or wherever, MIT, to get that kind of access. Now you just go on YouTube and you see you don't have an interaction directly with them, but so digital and the internet revolution already democratized or gave access to information, to data. AI is just accelerating that internet democratization. AI can maybe do that for financial services, healthcare, intelligence, et cetera, that's all the positive sides, or some of the positive sides. There are obviously darker and negative sides. In any transformation, you get negatives. And when automation, the first industrial revolution happened, the steam engine came in, and the factories began to emerge in England in the 1700s. People who had more artisanal jobs would complain because they were going to. And we've seen this all the way through history. Jobs come and jobs go. In the 1920s or 30s in New York, one of the biggest jobs was elevator boys. Little, typically young kids, maybe older, and they would be basically there, pressing the button. Why? Because it was kind of a scary new technology, and the users needed reassurance there was a human in there. Pretty soon, those elevator boys disappeared. I've only seen it in the recent past. Have you seen elevator guys? I mean, you've seen in some old-fashioned hotels sometimes, but in Brazil, 10 years, 15 years ago, and I used to visit Sao Paulo a lot and work, most of the banks had, not elevator boys, relatively old men in the elevator. So maybe it's like in Japan where they have like old guys hanging around companies because it's like social welfare, but or it's a status thing, I don't know. But elevator boys disappeared. It'll be like that. When I started in the bank, my managing director I sat outside his office or opposite his office, and he had a secretary sitting outside his office and a fax machine. No, we don't have that anymore, right? There are PAs and EAs, but they're shared between lots of managing directors, and there are lots of digital tools, and there's no fax machine, unless you're in Japan. But actually, Germany until recently as well. Yeah.
Sometimes in the government, in Hong Kong, you'll see it still.
Yeah.
But I mean, and for also the audience here, the book on future money, you also touched on the cultural elements, and given that you're a global citizen, you mentioned before, do you see differences also due to culture in how AI might be adopted, or is it purely just where the efficiency is?
There are a lot of questions around, there are a lot of implications for culture, and there are a lot of actually embedded assumptions around culture in AI. And one big question around AI, which I'm sure your audience has heard about, is the question around sovereignty and national sovereignty around AI. Why? Because a lot of these models that we're using in the particularly the non-China world, are they're American models, or they're trained on largely American data. They're trained on English, American English, sources like Reddit and others, the internet, and it's, largely American data. Now, there are a lot of amazing things about America. I worked for an American company for a long time, and I would probably think of it over time as generally a force of good. But one of the beauties of the world, where is it, 8 billion people we have now? I don't know. One of the beauties of the world is there are a couple hundred countries and lots of different cultures and languages. And if we all start using and relying on AI-driven models that are trained on largely the English language and American English, do we constrain our ability to think into
that's a good point.
More simple, because if you have lots and lots of ways of, one of the reasons Europe became so successful in the 1600s to the 1800s, if you went back to 16, filming this in 2025, went back to 1625, Europe as a whole was approximately the size of China, or what we call India today, or what we call China today. It was roughly the same size in terms of GDP. But the difference Europe had to India and China was there was no one large center of control. There was the Holy Roman Empire, but as Voltaire famously said, the quip about it's not holy nor Roman nor an empire, and it was kind of an empire, but it was not really an empire, right? It was very federal and decentralized, and there was a Habsburg ruler, but even within the biggest entity in Europe at the time, the Holy Roman Empire, was pretty decentralized. And there were bits when the Spanish and the Habsburg family became very powerful, but they didn't control the whole of Europe in the way the Chinese emperors did, or the Mughals did at the peak of the kind of Mughal supremacy. And that was one of the reasons why Europe industrialized first and Europe went global, and we live in this, still the after effects of a European-American world, because Europe is a very, heterogeneous place. If you go to systems that tend to be more homogeneous or controlled top-down, they've historically lost out over time. There's a dynamism, economic growth, but also, most importantly, intellectual. What is the world of the future, where if we just rely on a few models that are programmed by or trained by immensely ethnically diverse populations, because the West Coast, the US, and these companies have a lot of diversity, but they're all headquartered in one part of the world. And you could argue who are the other big AI companies? They tend to be the cloud companies, and so we've got a group of Chinese large companies in the China world, and then a group of American origin. The world is bigger than, obviously we're doing this in Hong Kong, and I work for an American company, but the world is much bigger than just China and America. So AI raises lots of interesting sort of intellectual questions, geopolitical questions, sovereignty questions. It also raises more prosaic questions around, like, the question you asked me about the nature of work. The nature of work has changed a lot. So when I joined Salomon Brothers all those years ago, a lot of the job of a junior analyst was to basically put in data. You spend a lot of time putting data into spreadsheets. You don't do that anymore because it's all automated. So automation and the internet replaced large parts of those jobs. So the classic pyramid you had, where you had lots of junior analysts and one MD and a few middle level, we used to call them we call them VPs in banking, that goes away. Instead of that pyramid, what you have is that the base of the pyramid has already, to be some extent, automated or outsourced or offshored. So if it's not been outsourced, it's been offshored in many companies. And this has obviously raised lots of questions as well politically, but there's been a lot of offshoring to India, to the Philippines, Central America, and that happened in the last 20 years. Why? Because actually technology. Telecom networks became good enough that fax machines got replaced by the internet. Data pipes could send enough data that you could have colleagues sitting in other parts of the world and you're collaborating real time, or asynchronously you're collaborating, or you could have call centers and service centers, and the rise of what was called GCCs, Global Capability Centers, or centers of excellence. These kind of grew as a big business theme in the last 20, 25 years, pre-AI. And in a way, so AI takes those themes of automation, offshoring, outsourcing, and then significantly accelerates it and makes it into a whole new world. And then if you don't have any juniors in the future, number one, what are we doing with all these college graduates coming out? Exactly. That's generally not a good thing for society. If you have lots of unemployed kids, particularly unemployed young men, that's never worked out well for society. And secondly, if you've automated, offshored, outsourced all your juniors, where's the next generation coming from? Yeah. This could be a much longer conversation, but so AI does, and we're seeing this already post-COVID, because during COVID, many companies hired a lot of people. Many multinationals hired a lot of people, partly as a kind of social policy response, because people wanted to show that they were not being, they were being considerate with society and their own workforce, and also government policies were very, there's a lot of stimulus, financial, economic stimulus during COVID in America, in Europe, and around the world. And so monetary policy was very easy, rates were very low, and so companies maybe were being encouraged to expand, or at least not contract. And since that kind of period of post-COVID, you've seen in many places graduate employment, graduate hiring really come down. And that creates a lot of challenges because particularly in America and maybe in places like the UK, people spend a lot of money going to college.
But there could also be an opportunity, right? And maybe then also going into your role at Citi, running a think tank for startup entrepreneurs, because maybe the role of the typical analyst in big corporates dies out or is not the same anymore. But on the other hand, the hurdle to actually become an entrepreneur, build your own vision as a young graduate or even non-graduate in the, of course, also YouTube society, you can come up with any ideas, but also build something quickly with AI. So maybe they will not learn to just do the number crunching, the Excels and so on as they did in the past, but maybe they build something with AI and then gain experience and become valuable to corporates at the later stage. How would you see that in your role advising startups and for sure also young entrepreneurs?
Any period of disruption is good for enterprising whether they're young or old people, because you're getting whole new opportunities being created. 100 years ago, or 150 years ago, to be enterprising often meant getting on a boat and sailing around the world and coming to places like Hong Kong, where we're filming this. That was adventure, that was enterprise. Now you don't have to get on a boat and sail around the world. Maybe you just do it in your AI-powered video. But the world comes to us, right, through the internet. As you look at opportunities for startups in particular, AI makes it much easier to scale companies. Yeah. And that's an opportunity. AI makes it much easier to scale. Just like Fintech would not have happened without the cloud revolution and the policy and regulatory revolution that took place. What do I mean? If you're trying to set up a Fintech 20 years ago, 25 years ago, in the first dot-com wave, so 1999, you'd have to spend a lot of money on hardware, on technology hardware. You spend a lot of money on technology hardware. You don't need to do that today. Yes, you need to spend money on technology, but you don't need that whole on-premise tech stack. In fact, you could argue that the fintech revolution of 10, 15 years ago, so not the original first generation of OG fintechs that came out of e-commerce. Because the way I think about fintech is like there's 2 or 3 waves, but there's 2 big waves. The first wave is basically the OG fintechs are Alipay, so Ant Financial now, Klarna in Europe, and PayPal. They're all about e-commerce enablement. That's your first wave of fintech. The second wave of fintech is the mobile phone, sort of post-mobile revolution, mobile internet revolution. It's kind of apps and mobile. And that's your Revoluts, your Monzos, your Robinhoods, and those were from day one cloud native. They were built into cloud. In fact, the fact that they're cloud native allowed them to scale much faster, much cheaper than they would have without the cloud. And it also will prepare them, because they're cloud native, for the world of post-quantum, which we'll come back to maybe. But AI is like the cloud revolution. Like the clouds allowed new startups, new fintechs, to expand in a way that wouldn't have been possible pre-cloud. AI is exactly that. But cloud took CapEx and made it into OpEx. It took fixed costs and made it into variable costs for hardware. What AI is doing is it's doing something similar for humans, not on tech hardware. It's doing it for your labor force. And typically your labor force is 50, 60, 70% of your cost base. So you're taking your biggest cost item and making it more variable and flexible, because you're effectively turning people into software subscriptions, which, sounds horrible. But if you're an entrepreneur, this is great for you, because you're getting you don't need to have a massive HR department as a middle size or a small company. Yes, you'll need a head of finance and a head of legal and a head of HR, but do they need to have huge teams? Maybe it's just like 1 or 2, one head of HR and 1 head of legal and 1 deputy head, and then lots of agents, lots of software bots. And that should make it much more easy to set up companies. But there's obviously, as you know, you're from Europe, so you know the whole debate in Europe right now about why does Europe not create as many startups as the US? In fact, I was just another thing I was reading on the way in to record this morning is there's a really good tweet from one of the co-founders of Stripe, the Collison brothers, and he was showing the growth of how US software companies in the last 5 years outpacing UK and European software companies, so new ones. And this is the whole debate about why there are more startups in the US, why do they grow faster? And I'm thinking particularly in the technology sector rather than in restaurants or other kind of startups. Technology is part of economic creation and economic growth, and AI will be part of that. But we've got to be careful of not just thinking about this as an AI or a technology topic. This is a much broader discussion. Yes, AI will help create and maybe destroy jobs and companies, but it exists in a legal, cultural, political, social world. If we have a society where the laws and the rules make it easy to do startups, you're going to get startups. As if you've invested in European startups, you know this issue, right? It's so much easier to invest in a US, be it Delaware or non-Delaware incorporated company. It's a few clicks. As an investor, as a private investor, it's a few clicks online, fill out a few forms. There are so many standardized tools. There are so many, both for the founder and the investor. Try doing that in the Netherlands or in Germany or in France, let alone Southern Europe. It's going to take weeks. And that's just as an investor.
Yeah, and then all the regulations you have to go through if you're in finance.
Totally, notarizing documents, just, it's... each time I invest in a very, very small way in one of these companies, in a different European country, I think, that's it, never going to do that one again. And then I go to another one and go, no, same, I'm not going to do that again. So it's not just about AI and technology, it's about the rules, the laws, and it's also about mindset. As I said, in the 1990s and the 2000s, Europe had a mindset that people think only in the West, only the US does. But there was a growth mindset in Europe because, this thing called the euro was being created. We forget. And I like reminding people that I actually spent a lot of the 2000s, early 2000s, mid 2000s as a young analyst visiting investors in New York, and all they wanted to talk about was the euro and European banks and European financials, because the European stock market was outperforming the US. The euro was also outperforming. There was a lot of American money flowing into Europe, and it's obviously completely reversed in the last 15 years. This year 2025 was different.
It's a very unique year.
It was very different in many ways. The euro is outperforming again. The Swiss franc always goes up. So yeah,
It's almost like gold. But I mean, that brings us also to the next topic, which I would love to round up on in terms of digital assets, especially as it's a hot topic also in the fintech scene today. So how do you see that, especially with now the US dollar struggling this year and digital assets being boosted?
There are two big topics right now, and that's what we focused on this year. One is AI, but the next generation of AI, so agentic AI and agentic commerce, and going from generative AI, which is still obviously unfolding and important. Generative AI is the show it to me AI, and agentic AI is the do it for me AI. And there's a lot of interest in focus on that area, but there's also a lot of interest in digital assets and particularly stable coins this year. So this week's Hong Kong Fintech Week, last week was Money 2020 in Vegas, and the two big themes in Money 2020 in Vegas, and I'm guessing it'll be similar in Hong Kong Fintech Week, is stablecoins and tokenization, digital assets. And then the other side, AI, with a bit of agentic AI. So those are the big themes. And this is very much tied into the change in the US administration and the more pro-digital asset and crypto policy they've taken, including specifically this focus on stablecoins, because the US administration sees this as support for US treasuries, T-bills, because stablecoins are, as your audience knows, stablecoins are financial instruments that are on-chain, on a blockchain, backed by a particular reference asset. And most stablecoins are backed by US dollars and T-bills, or some kind of high-quality high quality T-bill-like asset. And so if you've got whatever it is, 7-8 trillion of T-bills in the world, which are rolling over, a 3-month duration, a 3-month maturity rather. So you need to, keep filling that. Mm-hmm. And the potential demand for stablecoins, as we've forecast in our reports, is the equivalent of having a new China or more buying treasuries. Now, I think it's really positive for the T-bill market, stablecoins over the next 3 to 5 years. Whether or not it's going to be positive for the dollar is a different question, because what drives the demand for the dollar, so this year is about rebalancing. Everyone was super long the dollar, so I wouldn't draw a straight line out of this year necessarily and say, oh, the dollar went down. So I think we just came into the year super long the dollar, and it's more of a diversification trade. But on a 5-year view, what drives the dollar isn't stablecoins. On a 5-year view or a 10-year view, what drives the dollar is the investors' faith in the U.S. And that means both upside and downside. So primarily in the upside, it's, do I still think as an investor that holding dollars gives me access to some of the most attractive investment returns in the world? And sure, in the short term, interest rates matter. That's the key driver of short-term moves in currencies. But medium, long term, it's beyond just the treasury rate, the Fed rate, whether it's going up or down. Medium, long term, what matters is, are these amazing companies that the U.S. has created in the last 10, 15 years or seen grow in the last 15 years, these tech behemoths, the Googles, the OpenAIs, there are so many new investment opportunities that have come up in the U.S. constantly in the last 50 years and accelerate in the last 15. Does that carry on? And if the investor community or the global private sector thinks, yeah, I think that's going to carry on, that'll support the dollar much more than stable coins. There's also a kind of an issue medium long term about what are the alternatives to the dollar. Gold has obviously got a lot of money going to gold, but it's just not big enough or liquid enough to the only alternative to the dollar we've had in my professional career has been in the last 30 years the euro, and that for a few years looked like it was an alternative. And then it fizzled out with the sovereign crisis and the political issues around the sovereign crisis in the 2010s. China has obviously done an unbelievable transformation in the last 30 years. The transformation in China, of course you know this living in Hong Kong, has been spectacular from an economic and infrastructure perspective. But is that a currency alternative in the medium term? That's still very much up in the air. So a lot of the medium term support comes for the dollar from just it's the only large liquid, truly global currency with such a large number of investment opportunities or options, and that's so I think stablecoins, digital assets are a really important growing trend. We've written a lot about stablecoins. You can just Google that. We just put out a report in September last month, about 6 weeks ago, called Stablecoins 2030, arguing stablecoins were going to become, on the base case, almost a true $1 trillion market by 2030. That's just in issuance volumes. In turnover volumes, we were arguing it's going to become $100 trillion. So a huge amount of turnover, particularly in certain areas. So number one, the cryptocurrency industry, but also, and perhaps more importantly, in terms of growth or delta in e-commerce and digitally native companies. That's where we see stablecoin adoption likely to really take off. There are other areas where we don't see stablecoin adoption likely to become big, because the existing rails already move. Today's existing banking rails move tens of trillions of dollars every day globally. And a lot of that money flows between relatively traditional companies rather than cutting-edge digital companies. And those companies generally, for their regular B2B flows or their intra-company flows, look for BAU reliability. So they'll be cautious and slow about going to new technologies. Unlike, say, the e-commerce giants or the next generation technology companies are always innovating, experimenting, trying new things, just like they've done on AI. The fastest adopters in the treasury divisions of companies of AI have been the technology companies, because that's the kind of bread and butter. The non-technology companies and the banking industry come later.
Very interesting. I would love to, of course, go much deeper, but we are on time. So maybe just the last question you already alluded to with your report. I mean, where can people find you, know more about you? Of course, they should read the book, Future Money.
You should read the book. You should read the book. But maybe if you've been wondering why I've had this on the table, which I picked up from one of your colleagues.
20 Hong Kong dollars.
Do you know why it's called a dollar? Anyone in the audience know why this is called a dollar? Why is it called a dollar? Why is the Hong Kong dollar called a dollar? Guess, come on. Come on, Salomon, have a guess.
Is of course attached to the US dollar, is pegged to the US dollar.
Yeah. So remember before we started, I was talking about George Anson.
Mm-hmm.
And who's George Anson? Some people will call him a pirate. The Spanish would call him a pirate. The British called him the head of their fleet, Lord Admiral, Admiralty, just down the road. So the reason the Hong Kong dollar is called the dollar is when the Brits showed up and got Hong Kong as part of a treaty peace deal because they wanted to sell opium into China. They tried to use their money, first the pound and then the rupee, the Indian rupee. And merchants here, including the Chinese merchants, were like, nah, I don't want your money. We're merchants. Like I talked about before, the private sector and the dollar. Why does the private sector like the dollar? Because they trust the dollar. And more importantly, they see ways to make money out of the dollar. It was the same. Chinese merchants, other merchants in the region were like, we already have a currency here. This is the 1830s, 1840s. And they said, yeah, it's, in English we call it the dollar. Spanish pieces of 8. That was the currency of international, not domestic commerce, but international commerce in Asia. Why? Because the big galleons that would go from Manila to Acapulco, they'd go one way carrying silk and porcelain and China, with all these the treasure that would go one way from Manila, I guess, was the Hong Kong of its day, I don't know, in the 1700s. And it would go to Acapulco and it would come back carrying silver, mined in Mexico, Peru, Bolivia, in Spanish America. And the currency, the Spanish had a name for it, but it became called in English the dollar. Because remember I talked right at the start about Europe and fragmentation, the Holy Roman Empire, and the currency of the Holy Roman Empire, the coins, the silver coins. Before the Europeans, in inverted commas, discovered the Americas, the silver coins in Europe were mined in largely what we call the Holy Roman Empire, Germanic Europe, German-speaking Europe. And the coins in German-speaking Europe were called thalers, T-H-A-L-E-R. And of course, I think you're Swiss German, so you know what the Tal means. It means valley.
Yes.
And there's a little town on the border of Bohemia and Saxony, so today Czech Republic and Germany, which is a valley. This noble family, the Schlick family, discovered silver, and it became the biggest silver mine in the early 1500s in Europe. And with an inspired piece of marketing, they decided to call that town Joachimsthal, and the coin was the coin of Joachimsthal, and it got abbreviated into thaler. And from thaler, it became dollar, and it became dollar. And anyway, those mines ran dry, or they were not as productive as the mines that were, quote unquote, discovered in the Americas. And then these silver coins, even though they were mined thousands of kilometers, miles away from the original thalers, they were still called dollars. So when the Brits showed up in the 1830s and they tried to impose the pound and the rupee, the merchants here, the Chinese merchants were like, nah, we have our own currency and it's called the dollar. And you can run this place, but money is money. And it's the dollar. And if you go to the HSBC archives here, and they have an amazing collection of old notes, and it'll say on the notes, Mexican dollar. Because after Mexico became independent, it was... so ultimately it's about trust. It's about trust, opportunity, and it'll remain about trust and opportunity.
Actually, also, I was just recently visiting HKMA. They also have now a whole museum that you can visit, where you see all the dollars. From
Look out for the Mexican dollars next time you go.
Exactly. I unfortunately have to stop it here. We are on time. Thank you so much for your time, Ronit. Future of Money for everyone.
Get the book.
Next time, once again, Fast Check Podcast. Thank you.
Thank you.